Hey, Dan Fitzpatrick here. I want to look at Domino's Pizza. This is why. The uptrend is pretty strong here on this stock. If you're looking at the 50-day moving average, it's kind of dragging the 200-day moving average along with it. But here's the deal on this. As I understand it anyway, Domino's Pizza doesn't have any eat-in stuff. Like, I don't think you can go there, grab your pizza and sit there on the floor and eat the pizza. I think their deal has always been delivery. And with the way that this whole thing is going with the COVID boogie and everything else, I think we're going to be at a point where folks aren't really that eager to go to Papa John's. And even if they are, Papa John's has a greater amount of overhead because of all their locations. Whereas Domino's, these guys are strip malls. Literally, you've seen them. I don't have to tell you. It's like right next to the 7-Eleven, only half as big. And so I think their business is booming. But the chart is giving us one of those fairly rare entry points. This is a real kind of sloppy chart. It's all over the place. But every so often you'll get this little drift down to the 50-day moving average that gives you an entry point, kind of like what we had just back here. We fell a little bit below it, but okay, fine. So you wait for the stock to run up above it. You got 10, 12, 13% in just a few weeks. That's not a bad return. And I'm not saying look for, 9, 10% in a couple weeks. All I'm talking about is the entry point. What the stock does after that, I have no control over it, and I'm not even going to tell you what I think. I mean, I've seen these stocks when they pull back like this, as long as they form more of a base around here, the tendency is for them to move higher, but I don't have a crystal ball, and I'm not going to lead you to believe that I do. I'm just saying this. If you like this stock, if you like Domino's, this is your entry right here, and then you're keeping a stop just a little bit below today's intraday low. You're giving it like 3%. So you can buy this stock here, risk 3% on the trade, and then if the stock starts running up, you're going to make money. So, that's a trade idea for you. The key thing for this is it is a lower risk trade because it's closer to the 50-day moving average, and that's kind of where your drop dead date, deal is. And it's also a higher potential reward trade because we've seen these stocks as they run away from the 50-day moving average, they'll move back higher again. So you're risking a little bit of money to make more money, and that's a good trade in my book. So, okay, members, over to the strategy session. I'll see you there.